On All About Stocks this week, Sherkhan believes the Sensex will be at 1 lakh in the next 5 years. We'll tell you how and why. The oil index falls by 2%. We'll tell you if this is a good time to buy into the sector. And our investment advisor Hemant tells you why you should be investing in Max India for the long term. Welcome to All About Stocks. This is a show meant for retail investors like you and me. And what a time it is to invest in our market. Our guest this week is going to talk to us about why he believes the Sensex is going to be at 1 lakh in the next 4 or 5 years, and why we should be invested at a time when the Sensex might double or triple in the next short term. We'll tell you where you should be investing your money, what sectors and themes to look at, and when to buy. If you have questions, you can, of course, write to us. Our email ID is at the bottom of your screen, and you can reach me personally on my Twitter account as well. I'm going to bring in Ajay first. Ajay will give us an update on everything that went on in the Lal Street this week while you were in the office. Ajay, take us through what happened.
Well, Faye, it was another interesting week for Indian equities. In terms of gains, we added about 1% on the benchmark indices. So smart gains made this particular week, mainly to do with some improvement seen in macro indicators. The September IIP was much higher than estimate. Even the WPI CPI number, which was released, was much lower than estimated. So that in a way aided the sentiment in the market. Look at how the market has fared, and you would see the interest rate sensitive indices doing much better than the overall market. The PSU bank index, talk of real estate index, even autos, all three of them have gained over 2% this particular week. If you talk of the broader markets, they were outperforming the benchmarks, 1 to 2% gains coming in for the small cap and the mid cap indices. And now the market participants' clamor for a rate cut is only getting louder with these kind of improvement in macro indicators. But there was cautious tone coming in from various points in the market. RBI officials, RBI Deputy Governor Mr. Khan has clearly indicated this week that perhaps it could be premature to expect any rate action in the December policies. There still exists some upside risk as far as inflation goes, and one has to go in a very calibrated manner. But despite of the fact that particular statement, interest rate sensitive sectors outperform. Oil index, that one was losing about over 2% this particular week. Negative commentary coming in from influential brokerages like CLSA. The weak set of second quarter numbers also did not bode well. On fund flow side, this week actually saw pretty mixed action coming in. DII's profit booking accelerated, but FIIs were continuously seeing buying as far as the cash segment goes. So it was pretty mixed. Going forward, it will be interesting because the next week is actually a no man's land, when the second quarter earnings season being over this week, and the winter session of Parliament for any fresh queues only starts week after next. The next week, actually, according to traders, would be all to do with global cues, which have been pretty supportive, at least this week, US making fresh record highs.
All right, Ajay, thank you for that update. Joining us today, Hemant, Senior Vice President at Sherkhan. Hemant, it is always such a pleasure to have you on the show, but particularly this week, because I want to talk about this report that you've been working on. The assumption that the Sensex will triple or more than triple. If things are really good, we might actually look at 1 lakh in the next 4 or 5 years. Tell us how that's even possible.
Yeah, hi. Thanks for having me here. Clearly, there are a lot of things falling in place for us. First of all, you have a clear mandate. So you have a Modi government which is pro-investor, pro-growth. They're making right noises. We have Dr. Raghuram Rajan, who is the most prominent Deputy Governor of RBI. And also the corporate sector has gone through a lot of pain in the last about 4 to 5 years. They are hungry for growth. And importantly, the commodity prices, particularly crude, has fallen about 25 to 30% from top. The corporate sector is feeling far more confident about the growth visibility, though the actual numbers are not looking that great. Yes. But there's a sense of optimism. So we think that the earnings growth, which was at about 8 to 10% in the last about 3 to 4 years' time, can go back to about 20% plus.
So this is largely an earnings expectation assumption then on the Sensex. Is that true?
Absolutely. We think that if you look at the Bloomberg consensus growth estimates for next year, now people are talking about 20% plus. So we think that this is sustainable for the next 3 to 4 years. The capex cycle could come back. and which is why we think that there is a much more potential for Sensex to go up from current levels.
All right, so I'm going to assume then that's the best case scenario, that we'll be at 1 lakh, let's say in the next 5 years. What's the worst case scenario? Because things, I mean, if there's anything we've learned over the last couple of years is that things don't always work out the way we expect them to.
Yeah, in case, let's say the earnings growth, as we are talking that we are looking at 20% kind of earnings growth, but for some reasons the actual growth is, let's say, less to about 15 to 16%. And let's say interest rates cut do not happen the way people are expecting them to. Even in that kind of a scenario, we are looking at a Sensex level of about 54 to 55,000, which means that we are going to see 100% appreciation in Sensex on the most conservative basis.
All right, so worst case, most conservative, you're expecting it to double in 5 years. Best case scenario, we're expecting it to go up fourfold. So tell me this, and I'm going to, be skeptical because that's my job. One of the assumptions you talked about was the fact that crude prices and commodity prices have softened, and crude is at $80 a barrel. If you're looking at a 5-year view, is it fair to assume that crude will stay at $80 a barrel for 5 years?
Well, clearly, we don't have that kind of an assumption, but clearly nobody even thought about a month or two back that from $110, $15 it can fall to $80, right? So India imports about $150 billion of crude, and a 30% cut there means that $45 billion would be saved in our kitty. So that's a big thing. We think that the investment cycle can come back, because if you talk to corporate sector, if you talk to investors, there is definitely a sense of optimism, and that is what you need to really get that kind of a growth back on track. So we think that yes, a few things can go wrong. If inflation shoots up, the rate cut may take a little more time. Globally, things can go wrong. Okay, so these are the things that we'll have to work with. But on an overall basis, looking at the current scenario, we think that there's a very strong case for a big upside in the market.
Well, the other thing that's true about our market, that in spite of the fact that more retail investors have come in over the last 3 months, they haven't come in with the kind of capacity that they have to, to part with their household savings. Do you expect that to happen over the next 5 years? Will normal Indians start pulling their money out of fixed deposits and moving it into the market? What sort of impact will that have?
Well, yes, even our study suggests that new money has not come into equity market the way it should have come, given the kind of optimism that we are all seeing. But I think if you look at the overall component of the financial savings, it has definitely gone up. And if the inflation comes down, like what we have seen in the last about 2 or 3 months, we'll have to see how things pan out in the next 3 to 4 months once base effect comes into play. But if that really sustains, then there is definitely a case for more money to come into equity market. We think that currently we would be at about 3 to 4% of the net saving which has come into equity. It can go up to about 4 to 5% in the next 1 year.
All right, that's a massive amount actually if you're talking about 4 to 5%.
That's what we've seen in the 2003 to 2007 period when we had a big bull run. The amount of money that people had invested in equity was about 5 to 6%.
Okay, so give me advice then for someone who's watching right now who says, okay, Hemant, if you're saying that it's going to be so fantastic, I will start investing on Monday morning. Where would you like that person to invest his money?
Well, yes, definitely. It doesn't make sense to time it to perfection. Markets have gone up, so a lot of people would be a little skeptical that, and a lot of them are waiting for a correction to happen. But we think that it doesn't make sense. I think what you should do is to try and figure out how much of the money can be put into equity market. A large sum of that should already be put upfront. And we are looking at about 2 or 3 themes. One is the policy push, where we think that roads, power, infrastructure, these are the sectors where there is going to be a big revival in the earnings and the sentiment. So companies like L&T, Cummins India, IRB Infrastructure are the stocks that we like in that theme. Other theme that we like is auto and financial sector, because these are the leading sectors. Whenever there's a revival in the economy, you will see a very strong growth in the auto and financial sector. So ICICI Bank, State Bank, Maruti, Tata Motors, these are the stocks that we like in that theme. And there are certain blue chip names which have done very well irrespective of the market conditions. So companies like Sun Pharma, Lupin, TCS, these are the stocks that we should definitely be looking at investing in. And then there are certain mid-cap stocks where based on their own story and theme, they can do very well. So Dhanuka Agri and Network 18 are some of the stocks that we like in that space.
All right, as a disclaimer, Network 18 runs CNBC TV 18, which is, competition to this channel. But Network 18 as a stock per se has not received too much attention from the market up till now. Tell us why you think it's a stock to buy.
Well, it has done reasonably okay in the last 2-3 months. It has gone up by 25-30%. See, we think that online as a space has actually done very well with the way the valuations have, Flipkart and a few other companies have got. This company has 2-3 good internet properties. So we think that as you see more penetration of the internet, there is going to be some kind of valuation that they will get for this property.
All right, so what I'm going to do is I'll give you a quick recap of all of the stocks Hemant just mentioned. Remember, he did say that the market will, in the worst case scenario, double over the next 4 or 5 years. So it does make sense for you to enter the market right now. These are the stocks he talked about: IRB Infra, L&T, Maruti, Tata Motors, ICICI Bank, SBI, Sun Pharma, Lupin, TCS, Dhanuka Agritech and Network 18. All right, let's move on and quickly take a few questions before we go into break. There's a question here from Sherkhan, who's written in. He has 1,000 shares of HCC which he bought at 40 rupees. He wants to know if we should hold on to that stock. The stock ended the week at 34.75. Now, we know the Lavasa IPO got the green signal from SEBI. What does this mean for HCC and for someone who's holding that stock?
Bit of relief for them, though their balance sheet is stressed. They are also going to do a QIP of about 750 crore. So if there's a pickup in the investment cycle and if they're able to do this IPO, then it would be definitely positive for them. So one can hold on to it. Hold on to
HCC. All right, let's take another question. Sukhjit has written in, 200 shares of Manappuram Finance bought at 1770. Should I hold on to the stock? The stock ended the week at 33.80. So he has, made some profit, but we also know that the RBI this week tightened norms on NBFCs, Manappuram Finance being one of them. Gold NBFCs in particular will have to maintain a minimum tier 1 capital of 12%, which is higher than the 10% that the regular NBFCs will have to maintain. What will this mean for Manappuram Finance? It's phased. They don't have to do it right away, but it is going to eventually hit, isn't it?
Yeah, I think overall operating performance of Manappuram is okay. They are also diversifying into other businesses. It will take a while for them to really build up. And overall, the fall in the gold prices also could be a bit of a negative for them. So one can hold on to this one.
Hold on to this one? Okay, all right. If you were wondering about how to design a portfolio, we're going to talk about Hemant's own portfolio. And this one is the second portfolio that Hemant designed on the show. We call this our Modi portfolio. This portfolio was designed on the 13th of June after the Prime Minister took oath and took office. It's currently at an overall gain of 12%. The Nifty over the same period is up about 9.4%. So we are outperforming the Nifty, but not as much as we had expected. I'm going to give you a list of the stocks in this portfolio: L&T, Ultratech, Vatek Vaba, Container Corporation, Engineers India, Coal India, Oil India, ICICI Bank, SBI, LIC Housing Finance, Maruti, M&M, Tech Mahindra, TCS, Sun Pharma and MCX. MCX is up 43% since we bought it. This is largely on the lines of the stocks you just named when we were talking about it a little earlier. Not as spectacular as we thought it could be, but in all fairness, we haven't given this government enough time. How much time do you think it's going to take for these stocks to actually do what you expect them to do?
I think we should give about 2 to 3 years time, because the capex cycle is not revived as yet. Even the PSU banking as a space is not out of the woods. Numbers have not been that great. So once we see the earnings momentum kicking in, I think this portfolio will do much better.
All right. Do you want to make any changes at this point?
Not really. I think we have a fairly diversified portfolio. We have covered most of the important sectors. So I would like to continue with the same portfolio.
All right. So we're holding on to this portfolio. And if you have any questions about these stocks, feel free to write to us. And we'll have Hemant come in and answer those questions for you. I'll give you a recap if you want to take down these stocks. That's L&T, Ultratech, Vatek Vaba, Container Corporation, Engineers India, Coal India, Oil India, ICICI Bank, SBI, LIC Housing Finance, Maruti, M&M, Tech Mahindra, TCS, Sun Pharma and MCX. It's time for us to take a very quick break, but don't go anywhere. When we come back, we'll take a look at some of Hemant's past recommendations, and he'll also tell us why he believes that we should be investing in Max India for the long term. That's on the other side. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Hemant Jani is still with us, helping us figure out a strategy for our long-term stock portfolios. Now, this is the reason why we take Hemant's recommendations so seriously on this show. Torrent Pharma, he recommended this to us on the 4th of April this year. It was trading at 565 with a target of 643. That stock is currently at 936. Hemant, thank you for the really strong recommendation. What would you recommend we do with this stock right now? Should we hold on to it?
Yeah, it makes sense to hold on to it. The recent quarterly performance of Torrent Pharma was extremely good, 25% growth in the top line, almost 52% growth in the bottom line. In terms of valuations, it's still 15-20% cheaper than some of the top line pharma companies like Lupin, etc. So one can hold on to it with a price target of about 1,050.
All right. Hemant has been kind enough to pick another stock for us. He's picked Max India. That stock ended the week at 411 rupees. The market cap of 11,000 crore rupees. Now, Max owns a life insurance company and a healthcare company. And it is reported really strong growth of 26% year on year. Hemant, tell us why you believe, given all of the options available in the market right now, that Max India is the best one to pick at this point.
First of all, we think that insurance sector would do extremely well in the next 3 to 5 years because it has gone through a lot of pain. Now, many companies have turned to profitability. They are fully funded. So we think that there is going to be improvement in the penetration level. And Max India is the third largest player in the insurance space. And given on most of the operating parameters, whether you look at the consistency ratio, persistence ratio, this is really standing out at number 1. And given the overall management quality, balance sheet, etc., we think that it's looking pretty attractive. So over the next 2 to 3 year period, we think that this can be a multi-bagger also. So there could be a 2 to 3-fold jump in the stock price. And for next 1 year, we have set a price target of about 480.
All right, a price target of 480 on Max India. That's Hemant's recommendation for this week. Take that down. If you have any questions, you can, of course, get in touch with us. Let me answer some of the questions that came in during the week. Suven Life Science. Saurav has written in. He has 1,000 shares of Suven Life Sciences, which he bought at 26 rupees. The stock ended the week at 211. It has run up quite drastically from 78 to 211 in just 1 year. That stock was on your screen right now. You can see that chart. He's obviously making plenty of money on this stock. What would you recommend he does?
I think it makes sense to hold. It's a good quality CRAMS play, fairly integrated. They're working on certain NSC molecules. So depending upon how successful these are in different trials, there could be a further trigger. But overall, we think that it's an interesting place, so one can hold on to it.
Even if he does hold on to it for the next couple of years, what do you expect from this stock?
See, if some of these products, the results are very good, it could be a multi-bagger story.
All right, a further multi-bagger story for them, what you've already got. So hold on to that stock. Ravi Shankar has written in 375 shares of BPCL, which he bought at 250. Should he hold on to that stock? The stock ended the week at 734. This is what happens in a boom market. Everybody sends in success stories. BPCL reports a steep 50% drop in profit this year. Refining margins fell sharply as well on the back of those international oil prices that basically devalued its entire stock. We also know the government has hiked excise duty on petrol and diesel by about 1 rupee 50 paisa this week. What do you expect from BPCL going forward? See,
this is a temporary setback, but overall we think that the fact that the diesel prices have been decontrolled, a lot of more reforms are likely to happen. The crude oil prices have come off, are definitely big positives for the oil and gas sector. So yes, from a short-term perspective, there could be a bit of a negative reaction because of the quarterly performance, etc. But from a next 1 or 2 year perspective, we are extremely positive. So even BPCL, which is a fairly diversified upstream portfolio also, I think it is one of the best plays in this particular space, so one can hold on to it.
Actually, let's talk about oil and gas in particular, upstream and downstream, whether we're comparing the Reliances to the IOCs or the BPCLs or the rest of the companies. Where do you see the most value right now? And if we are to bet on the fact that these reforms are going to come in, diesel price deregulation is going to be seen through to the end, what stock would you put your money on at this point?
Well, clearly Reliance, the gas price hike was much lower than the anticipated, what market was expecting. And the operating performance has not been that great, and it has been a stark underperformer. So from a short-term perspective, we are not too positive on Reliance, so one can avoid. As far as oil marketing companies are concerned, we are extremely positive. So HPCL, BPCL both are looking extremely compelling. There might be some small correction because of the fact that they've already run up. But we think that given the kind of assets that they are having, the intrinsic value, and the fact that the profitability will be extremely good depending upon how the government takes further steps on the subsidy sharing, but we are extremely positive on both HPCL and BPCL.
All right, so then should we be using this current correction as an opportunity to buy?
Absolutely, we think that there's a long way to go. Yes, one thing is that if there's a follow-on public offer, for some of the stocks, then there could be some pressure. So we should use that correction as a buying opportunity.
All right, use corrections as a buying opportunity. Well, Shubhavel has written in 500 shares of Dena Bank bought at 68 rupees. Should I hold on to this stock? Well, the profit fell 52% on lower NIIs and NPAs had also increased this particular quarter. What's your call on Dena Bank?
I think some of these smaller PSU banks, the performance has not been that great. So one can shift from Dena Bank to SBI, which looks much better.
Are you more confident about the management of SBI at this point and its management of its NPAs?
Absolutely. It has taken many steps in the last 1 year, particularly after the new MD has joined in. There is going to be much more improvement in the net interest margins and particularly the slippages part over the next couple of quarters. So we think that SBI is a much better bet.
So among all of the PSU banks right now, you say SBI is the best to enter?
SBI, BOB and to some extent PNB are the best bets.
All right, so there you have it, 3 best bets within the PSU banking space. Let's take another question. Vijaya Raghavan has written in, he has 800 shares of IFCI which he bought at 37 rupees. He wants to know if you should hold on to that stock or would you rather have him switch it over to IDFC, ICICI or RIL? What would you like him to do?
I think it makes sense to move to ICICI. Operating performance of IFCI has not been that great. The asset quality continues to be under stress. ICICI on the other hand is doing far better. Insurance could be a big trigger depending upon how the strategic investor comes in there. So we think that ICICI is much better bet.
All right, we're going to take a very quick break, but stay with us. When we come back, we'll discuss more stocks. Lupin and TCS is on the other side. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you for spending time with us this weekend. Hemant is still with us and he's helping us figure out a strategy for our long-term portfolios. It's time for us to take a look at your portfolio. Every week we pick the portfolio of one lucky viewer and we look at all of your stocks, tell you what you should be doing and how you should be re-strategizing your portfolio. This week we've picked Rajni, who sent in a list of the stocks in her portfolio, and right on top, very interestingly, 27 shares of Aditya Birla Nuvo, which she bought at 1,160 rupees. The stock ended the week at 1,802. Hemant, you've recommended this particular stock on the show in the past. It is such an interesting stock. It's such a proxy for the economy. Also, it has, like we've talked about on other stocks, it has an insurance business that is among the leaders of the space as well. What are you expecting from Aditya Birla Nuvo going forward?
I think across the verticals, it's doing pretty well, and we think that if the economy is going to revive, then the growth is going to be far more robust over the next 2 or 3 quarters. So on a sum of part basis, we are looking at a price target of about 2,000 for this one.
2,000 for this one. Would you expect Rajni to increase her holding to Aditya Birla Nuvo at this point? Will there be opportunities in the coming weeks?
There could be some correction in the market in the next, let's say 3 or 4 weeks, because the result season is over. So if we don't have a rate cut, there could be some amount of volatility. So if there is a further correction in Aditya Birla Nuvo, definitely she should add more. All
right, add more of that stock. Let's take another one. 55 shares of Titan bought at 235 rupees. There was some concern there with the falling price of gold and the Tanishq business. But what's your call with Titan right now?
Yes, the festive season, the growth was not that great. The Golden Harvest scheme, they're going to relaunch, so that was a bit of a setback for them. But I think the consumer discretionary space, we think that it will do exceptionally well, and there are very few quality companies here. So Titan is one of the best companies that you have. So yes, from a short-term perspective, there could be a bit of a disappointment, but for next 1 or 2 years, it's a great buy.
20 shares of Lupin bought at 885. Look at that stock. It ended the week at 1,443. Hold on to Lupin as well, Hemant?
Yeah, it's doing extremely well, though the management has downgraded the operating margin guidance for next year. But overall growth is so good, much best quality management that you have in the pharma space. So one can easily hold on to this one.
All right, I'm going to take the next 3 stocks sort of like a rapid fire because I already know the answers. Hemant's already mentioned these stocks twice on the show. L&T bought at 996. It's currently at 1,621. Also, LIC Housing Finance and TCS. Hold on to all 3.
Yeah, absolutely. They are my favorite stocks. We've talked about them. So clearly hold on to all of them.
hold on to all of those stocks. And if you have any questions for Hemant, remember you can write into us. Our email ID is at the bottom of your screen. We're right here. We've been here for the last 3 years to help you with exactly this, picking shares for your long-term portfolio. Hemant, thank you so much for spending time with us this weekend. Thank you for watching. Stay with ET Now.